So hi, you're with Kelly Wilson of the Wilson Team, Ottawa Mortgage Brokers, and today we brought in a guest that I think is long overdue, Larry Hoover. Hi, Larry, how are you?
Hi, very well, thank you, Kelly. Thanks for having me.
No problem. Can you hear me okay?
Very well, thanks.
Excellent. So Larry, you are an insurance broker, just as we are mortgage brokers. And I felt that this is one of the most important conversations that you have to have when purchasing a home, because as much as we don't like to talk about insurance or we're shopping interest rate on insurance, you don't know what you don't know until it's too late. And me being a real estate investor myself, I personally had a broker that I was working with for many years, was an old friend. As soon as I got a property, I just sent them all the stuff. They'd set up the coverage and away that I went. And it was good while I was paying. And he, I didn't really negotiate rate too much or anything like that. I just assumed I was being taken care of and that was it. Until I actually had a claim. And the claim was on a waterfront property that we had invested in, about $500,000. So we've got well and septic, we're on the waterfront, and we have a sewer backup. Make the phone call, and all of a sudden I find out I have no coverage. It took him almost a week just to even get back to me, because I think once he realized he checked my coverage, I didn't have any. So trying to deal with that on my own was it was very awful, because we're having to deal with mold issues, contractors, trying to manage the whole project on my own, and then the cost associated was close to $70,000. And whose pocket is that coming out of? Mine, right? So I think that this conversation needs to be had. The reason we invited you here is because you're probably one of the most detailed and passionate when it comes to understanding insurance, and you go above and beyond in terms of looking at the whole product portfolio, clients' needs, long-term, short-term, and everything down to pets. I mean, you ask every question under the sun. You're very versed in what you're doing. And I think that it's really important that people need to know that rate is not what you should be shopping for. You need an expert. This is the largest asset you're ever going to have, ever. And you got to make sure that you're covered properly, because this is something that can bankrupt your family, yourself. And we just want to make sure that if you're going to get involved in any real estate, including your first home, you need to do diligence. You need to be protecting your money. You need to be protecting yourself and your family. So I welcome you today. I'm very excited to have you on this Zoom video today. And I first want to just talk a little bit, maybe you can give a little bit of background about yourself, because I know we're going to lead into broker versus agent, right? What's the difference when people are looking around, and maybe give us a little background about yourself.
Well, thanks, Kelly, so much. I think after hearing your introduction there, I think I should take you on the road with me so you can introduce me to the presentation groups that I do. So thank you for your kind words. Yeah, I tend to be very passionate about this topic because a number of years ago, I transitioned my career from the corporate world. And when I was analyzing what I wanted to do, what my strengths were, and so on, I'm basically come from a sales marketing background. Somebody suggested insurance, and I never even gave any thought to that. Then I decided to analyze my own personal situation. I'd owned homes for decades and drove cars, obviously, for a little bit longer than that. And at that point, I assessed that I paid about $77,000 in premiums over the years, but $11,000 went to commission or brokers. And I never had a conversation with anyone unless I needed something. So I thought, you know what, I can be different. So that's how I got into the business a number of years ago. My specialty seems to be property, because auto insurance, of course, is very heavily regulated by the province. There's not a lot of wiggle room there. But in terms of property, there's lots of different variations and moving parts that a lot of people don't know about. So I decided to really emphasize property. So personal property, personal residence, primary residence, rental properties, and seasonal properties as well too. So you mentioned the difference between brokers. Now, I chose the broker route versus the agent route. And the reason being is that brokers represent a number of insurance companies, just the same as you represent multiple lenders as well. So which means that you've got more flexibility, you've got more choice. You could bring to the table to your clients a solution that may make more sense to them than perhaps not going with a broker. So I like that idea. So the agents represent basically one company. They represent the products and the services from their current company. So there's not nearly as much choice for the end consumer. So that's the biggest difference there. You mentioned something interesting. When I present, I ask rooms of people, what do you think the largest physical tangible asset you or your clients might ever own? And everybody shouts out the house, which is correct. Then I ask a second question, what do you think is the second largest physical tangible asset or assets your clients might ever own outside of their investment portfolio and rental properties and other? Nobody gets this one. I think I've had 2 people have gotten this, and over 1,500 people I've asked this, and that's the contents in your house. People just do not make that connection. So they just kind of bundle it all under the insurance, home insurance topics. So I get people to really think about that, and I highlight that when I review people's policies as well. I have a story that I do want to share in terms of a broker versus agents. I call it my fish tank story. I had a client who called me up a number of years ago and said, Larry, I want to work with a broker because I called into my agent and the call center took my call. I explained what happened to me. My fish tank blew up and damaged my basement, my finished basement. He decided he did not want to make a claim and he would pay for it himself. And his next renewal showed that he had lost his claims-free discount just because he had that conversation. So he was quite upset. So he changed from the agent model to the broker model. So he had a buffer who acts in between. So when I hear people say, oh, my insurance broker, they're a friend, I play golf with them, I've known them for years, they're really nice people. I've got examples whereby, well, they were not properly covered or they were missing discounts as well too. So don't fall into the trap that it's a nice person, because you don't know what you don't know, as you said, until something bad happens. So those are the things to look for in terms of a really good broker versus an agent. Asking lots of questions. The more questions they ask, chances are you're going to get a more responsible, proper coverage that you deserve, and so on. So that's the difference.
And I think it's important to have that broker, somebody who's very experienced in all aspects of insurance. When you're making that call, you know, it's exactly what you said, the fish tank. If I call the bank directly, right, the minute that information is coming out of my mouth, right, is what they're holding on to, as opposed to if I call my broker, I could get some advice as to the best way to proceed with the situation, or how do I structure this properly, as opposed to just being denied because you don't understand the rules of engagement, right from the beginning. So and every bank is different, so it doesn't mean you're saying the wrong thing or you're changing anything. It just means that there's a proper way to go about something, and every bank, every insurance company is completely different. So you need that expert on your side on that team, right?
I agree. And I'd like to point out that it costs you nothing more to work with a broker versus an agent. The commissions are pretty much the same.
Exactly. Okay, so one of the big things is we've been seeing a lot of increases. I know mine just went up. I think I sent you my policies, but maybe you can speak to why people are seeing such an increase on their insurance policies on renewal.
Very good question. You're right. So I ask people to think about what experiences we have when it comes to insurance and pricing and so on. So in our day-to-day, we're being inundated with advertisements on TV or radio or print, and the main theme seems to be pay less, discount, save money. And that seems to be what people are focused on. So I think we're conditioned to think that way over the years. I know I have. But the challenge really is, what do those numbers mean? And we're going to talk about some examples where people thought they were properly covered, but they were paying a low premium. So we'll get to that a little bit later. But to answer your question, one of the statistics that I saw recently was that the cost of home insurance in Ontario in Q3 of 2019 versus 2018 has gone up over 15, almost 16% year over year. That's a lot. So what that means is that most of the policies that we see for renewal coming into our office, they're increases. And a couple of reasons for that. Number one, the climate's changed. It is different. There are more violent thunderstorms, and that really takes a toll on the infrastructure below the ground, the things that we cannot see. And to that point, the infrastructure below the ground level is getting older. So the pipes are getting older, the tree roots are getting bigger, and hence there's a chance for more damage. Another point is, compared to 20 years ago, our basements are more expensive in detached homes and cottages than they used to be because they're basically living rooms. So the water obviously goes where the basement is, and that's where the damage is happening. So there's more to fix. Another thing as well too is that in the urban centers, there's a lot of asphalt and concrete. So the natural runoff for water and absorbing into the ground isn't what it used to be. It has to go somewhere. And we all know that the infrastructure in the bigger towns and cities are not keeping up. And that includes things like hydro utilities as well as water and sewage. So as a result, there are more claims and they are going up in cost. So that basically is what's happening. I will mention, because my emphasis for our podcasts are on the property side, but on the car side, because this is important, cars gone up about 16% quarter over quarter, year over year, because again, there's more accidents and it's more expensive to replace a bumper because they have computers in them now. So that answers the other side of the coin. People are naturally asking, why is my car insurance going up so much? Same thing. So it's a question of, okay, if I have to pay more, I want to be properly protected. And that's part of our exercise here today.
Right. And, having not enough coverage, we have the example of mine, which was sewer backup. What are some other examples of people not having enough coverage that you see come through?
Good. Well, I have a sewer backup story as well. And water is kind of a separate topic that we'll hit on some specifics in a couple of minutes. But there was one woman that I came across a few years ago. She had a sewer backup claim, and she was with a bank. And she was in a 3-year-old beautiful custom-built bungalow with a huge finished basement, so a lot of investment downstairs. And she was on a septic as well, too, just as you were. So she wasn't sharing all the dirty, bad stuff with everybody down the block, just what was in that septic. So best practice number one, if anybody buys a property with a septic, they should be asking for the proof of pumping document. It should be, in my experience, it should be within a year old, because just because someone tells you it was pumped recently, that may not be enough. So number one, she did not do that. In the first spring runoff, when the snow started to melt and so on, it's one of the wettest times of the year, she had a sewer backup and it made a horrible mess of her basement. So after all said and done, the claims adjuster said $75,000 damage. Unlike you, she had some sewer backup coverage, but hers was $15,000. So she paid her deductible. She got a check for $15,000 and she was out of pocket for $60,000. And the first thing she said to me was, Larry, now I know why my premium was so low. And I said, yes, because sewer backup is the #1 cause of claims in Canada and growing for the reasons that I just stated. Mm-hmm. So that is one example of the sewer backup. And that leads in quite nicely to finished basements. So quite often when families buy a new home and they have a young family, one of the first renos they do is they renovate the basement. Mm-hmm. So, but they forget to tell their insurance person. And where does the water go? Downstairs. So that is another thing. So anybody who's looking at doing this, please make sure that you have that conversation. Yes, your premium will go up, but if you want to be reimbursed for the basement, then do it. Other things as well that I would suggest is are decks. Decks can be very extensive. They could be very expensive. I've seen $15,000, $20,000, $25,000 decks, man-made material, glass railing systems. And that's another area whereby if you don't tell your insurance person, you may not get reimbursed if it's destroyed. Renovations. You are covered to some degree on most policies for general renovations. But depending on the cost of those renovations, I looked at a policy of a high net worth client in Toronto, and he had made 4 renovations in the previous 4 years, and the cheapest one was $85,000 powder room. So besides saying, I'd like to see your powder room, I thought that was rather impressive. But he said he did the addition, and he said over $1 million of renos, and he didn't know that he should have told his insurance person that. So he might be vulnerable to not being reimbursed for every dollar that's gone. Another example, and this doesn't affect most of us, but I thought this was interesting, another high net worth fellow who had a fake lawn. He had a custom built lawn that you roll up and have professionally installed on his front yard. And there was a sewer backup at the end of his property close to the sidewalk, and the city had to damage his front lawn. And he did not have a very simple coverage that may have cost an extra just $5 or $10 a year that would have reimbursed the $17,000 he was out of pocket for. So he didn't even know what that coverage was, but it's pretty standard stuff. So that's another area where, another example where somebody did not have enough coverage. And there are other examples as well.
Well, I think that's going to lead us into the next one, which is you're going to share some really good, I guess, tips that we need to be looking at, because there's a lot of people that are missing discounts that they should qualify or do qualify, but they're just not being asked the right questions. So maybe you can talk a little bit about that.
I will, and this is one of my passionate areas and so on, because I didn't know about some of these things before I got into the brokerage business as well too. I will make it clear though that based on the wording of our policies, it is literally up to us, the homeowner, the property owner, to inform our insurance person of these things. So the challenge is, how do we know what we don't know? And so on. So I will mention, because when we get our renewals, we are conditioned to kind of flip to page 3, 4, 5 and look in the bottom right-hand corner and see what the new premium is and compare it to what we were paying last year. That's how we are conditioned. Quite often the renewals include things such as, have you done this, this, or this, because it may affect your premiums. And that's basically how most of us get educated. It's kind of a self-serve thing, really. But missing discounts, some common ones. Missing discounts, excuse me. New shingles, quite often companies will give a small discount for you on that. So that's one that's very commonly missed. People don't know about it. Another one is a new furnace. Quite often companies will give a small discount if you replace your furnace. More important here in Ontario than it is in the southern US states, as you can imagine. Same with a hot water tank. A newer hot water tank may give you a little discount. There's something now out and has been for a few years called a tankless water heater. More and more people are buying these things. It's instantaneous hot water to your shower. I'm not convinced on that part yet, but at any rate, the insurance companies like the idea of tankless because it's not 40 gallons of water in a conventional tank that could rupture and cause issues. I would say the one I'm most excited about, especially when I talk to people who are mortgage brokers, is the HELOC, which essentially is not a traditional mortgage, but basically it's a mortgage taken out against the equity of your house. And these have been very, very popular in the last several years because people are taking the equity or some of it out of their house and doing things with it, which can be really, really great. However, what most people do not know, and this includes mortgage brokers, is that if you now no longer have a traditional mortgage, there are quite a few insurance companies that will give you a mortgage-free discount if you have a HELOC. And a mortgage-free discount is one of the largest discounts we see. It could be up to 15, maybe even 20% of your annual premium. That's a lot of money over X number of years. So
What's the purpose of that? Why do the insurance companies like that?
The best answer I could come up with, Kelly, is that they somehow seem to feel that you're now more responsible and you're a better risk. It's kind of like when we were drivers and once we hit the age of 25, suddenly we're a better risk and our rate goes down for car insurance. Kind of the same type of thing. I agree with you, but I can't change that. But what I can change, and with your help as well too, because you're a big believer in this, and this is right in your area of expertise, is to make people aware that they may be missing out on a discount. And I come across this almost every week when I review people's policies and I'm asking about discounts that they should have had several years ago, or in some cases longer than that. So that's a really, really high profile one. Also, water damage mitigation devices. Fancy word for saying if you install stuff in your house that keeps the water out, such as backflow valves or other types of things, some companies are giving small discounts for that as well, because today it's largely about the water damage on our properties that's increasing our rates over the years.
And the inside of the condo, right? I think that was a big one of trying to figure out, because the condo only wants to rebuild it to its original state. However,
Yes.
there was lots of work done in the property.
Right. How do you prove that? And that touches on the topic that we're going to cover off in a few minutes called home inventory. So not only understand what you own, the contents and the personal property that you own inside, it's also those betterments and improvements that you mentioned. So I highly recommend to people to take your phone, because the phones today are basically video cameras, take pictures of those things. So it could be countertops, it could be sinks, it could be hardware and doors. I know people spend thousands of dollars just on doorknobs and door handles and so on. It could be high-end window coverings or windows themselves. It could be crown molding. It could be floors. Some floors are much, much more expensive to replace than other types of floors. It's not exciting stuff to do, but do it. It won't take very long to do that. And I would do that with the insides of the condo and as well the inside of any other type of property as well.
And do you need to keep the receipts, or is actual photographs of everything inside the house good enough?
Well, in terms of home inventory, when we can kind of jump there to as well too, because that's this topic. The more the better, generally speaking. And the beauty of pictures today is that it's now no longer saved on the premises, so it won't get destroyed. But I recommend to people, if they're doing renovations and they're having contractors in, I take pictures, and I recommend that they take pictures of the supplies that were purchased, which is a great record. Also, the invoices that they were charged by the contractors as well too. Years ago, this was just done for, let's say, appraisals, people saving appraisals and so on. But today, in my mind, it should go to everything that we just talked about as well. So you've got all that saved and proven. So that will help you get more money faster and a more positive experience.
Yeah, and we have a lot of people that when they're buying condominiums, they just get the basic coverage, right? So trying to remember to ask for the betterments improvements rider, right, on their coverage is a huge one.
It is standard, and there's some flexibility into what that number is as well.
Yeah, so one of the things we definitely want to talk about is rental properties. We have a lot of investors that we're working with, and I think this is really important for a few reasons. One, the property liability, the tenant liability, rental coverage liability. So maybe you can talk a little bit about, hey, I bought my first rental property. What should I be doing after I talk to Larry? He's going to tell me all the great things I'm going to have to look for.
Excellent, thank you. And I will just kind of give a kind of a high-level response to that, because I would strongly recommend that when people are looking to purchase a rental property or another home, personal home for that matter, the money person comes first. They're 1A. Then the real estate agent might be 1B. I would put right after that the insurance person, because there may be a real challenge getting coverage for some types of non-standard properties, and you do not want to wait to the last week or two before the closing happens, because you'll have a lot of other things on your mind. So check that box off as quickly as you can, and you'll find other things to do with your time. So that's kind of a best practice there. But you're right, there are some certain standard coverages for rental properties. One thing that I've seen, and I'm actually working with the client right now who has multiple condo rental properties. One of her coverages, one common coverage is rental property replacements. So if the property is damaged and the tenant can no longer live there, they may not have to pay rent. However, the landlord, the property owner investor, is still responsible for paying the mortgage, the lender, each month as the months go by. So a common coverage is rental replacement coverage. Commonly, it pays you up to 1 year if that person cannot move back in within 1 year. So that is important. The lesson learned here is that I'm looking at a policy right now from someone who first got their coverage for their rental condo years ago, like 10, 12 years ago. And the difference between rent that she charged then and today is significant. It's almost $700 higher today than it was then. However, her rental replacement figure is stale. It's from 12 years ago. So if worst case scenario happened and she was without rent for 1 year, she would be out $6,000, $7,000 out of pocket because she did not update that rental income number. So for those landlords and folks who have rental properties, that needs to be refreshed. If it's been a few years since you've shared that new rent figure with your insurance person, that's number one. Number two, standard coverage is personal property of the investor, which usually means things like appliances. So if there's 4 standard major appliances, you may have $5,000 to $10,000 that reimburses you, the investor, if it's destroyed. So I've seen policies where they may be missing, or the number's just too low. It's not an expensive coverage to add. It's pretty standard stuff. I would say water damage as well is another one that we have to look at, because when the homeowner, the owner of the property, does not live in the property, insurance companies consider that slightly riskier, which makes sense because usually the owner of the property takes really good care of it to some degree. So in the cases of water coverage, try to get as much as you can, and that depends on certain things. The last one that you touched on, I think, is very, very important, and that's liability. What if they're sued? And you want at least $2 million of liability coverage if you are a landlord, especially if there are multiple units in that rental property. So the more families, the more people in that property, the greater the risk. And you can't control those things, generally speaking. So, which brings me to another topic called umbrella coverage. We have started telling our clients about this new policy and this new coverage. So for example, if you have $2 million of liability on your home or your rental property, and $2 million on your car insurance, umbrella lets you add an additional $1, $2, $3, $4, $5, $6, $7 million on top of all that. And that will really increase the amount of liability coverage if you're sued on both sides of those types of properties. The building property and the car insurance property. And this is not very expensive at all to add extra millions of dollars. And if I may, I've got an example that is a rather sad example of somebody who kind of fell into this unfortunate area where he was undercovered. This goes to a homeowner. It could just as well be a landlord or investor. But there was a party at this person's house. There was alcohol. A young man fell down the stairs, and he's in a wheelchair, and he will be for the rest of his life. He was in his early 20s, and he had to go back to his friend, the homeowner, and say, "I'm sorry, but I have to sue you, and it's going to be for millions of dollars," because there are case precedent whereby successfully people have sued in this type of scenario. This person only had $1 million coverage liability. So it's still in the courts. I don't know what will be settled, but anything over $1 million, that unfortunate homeowner, or possibly it could be an investor, could be out of pocket for years and years and years having to pay the difference. So it could ruin people, as you mentioned. It could bankrupt people. It could ruin relationships with people. And so that's something that's very, very important. So you can buy umbrella coverage just as a standalone coverage, even if you don't have a policy with that insurance company. That's how important umbrella is starting to become.
Wow, I did not know that. And maybe I think that's a good lead into what if I am sued, right? What are the types of things that you're seeing people being sued for?
Well, on the home side, it's usually the slip and fall is the most common one. I just gave an example of alcohol. So you can use your imagination. Anywhere where there's alcohol, there's a potential risk for people. I've also seen or read that high net worth people, they can be a target for these types of scenarios because people think, oh, they've got money, we are going to sue them. And as many parties will be named in a lawsuit if it's a bad enough accident, or even if it's a moderate accident. So those are the types of things that we have to look out for. So I would definitely, anybody out there who has $1 million liability coverage on anything, that should be looked at fairly quickly, because that is a significant one. And we don't schedule these accidents, do we?
No, and one of the things that I liked when we were looking through the audit was you were asking me questions about dogs, pools. Maybe you could touch a little bit about those ones. I know we talked
No,
about.
yeah, pools doesn't raise an eyebrow, but dogs do. Pool I will touch on because we're talking about liability. What if I'm sued? Pools, yeah, people can drown in pools. People can be significantly injured in pools. It may be less expensive for somebody to unfortunately pass away from a pool accident than if somebody broke their neck from a pool. whereby somebody can get sued for a significant amount of money that can about earlier. So again, pools, if you have a pool, first off, make sure your insurance person knows that you've got a pool so it's documented. And it may increase your premium a little bit, but it's not very expensive at all, but it is definitely worth it. Dogs are interesting because there are certain breeds that some insurance companies may not even take you on as an insurance client. There are certain breeds that have statistics and reputations for biting people. I read not too long ago that there is a dog bite in Canada every 60 seconds. And the average payout, meaning somebody was sued, is $73,000. Now, this is across Canada, which means somebody was sued because a dog bit somebody. The most common victims are seniors and kids 5 years old and under, so they're the most vulnerable. However, if your dog mauls the face of a young child, you may be sued for more than that. So I ask my clients, is there a dog living in the household, and what kind of a dog, what kind of a breed? We want to get it. We want to be transparent with the insurance companies. It may not affect your premium at all, but just in case, you never know. And that's the job of an insurance person, to ask these types of questions.
Definitely. And I think one of the types of properties that are my most favorite, which is the one that I didn't have the proper insurance coverage. And actually, I contacted you not that long ago regarding another property that we were looking at, a waterfront property. Now, I was blown away by the amount of what the quoted insurance premium was. It was almost $10,000 a year for a property that was $250,000. But maybe we can talk a little bit about what types of properties you need to be looking at for seasonal, because one, you're not there all the time.
Right.
And then two, what's your surroundings? How are you being protected? How are you being covered? So maybe you can talk a little bit about seasonal.
Right, good point. And there's all types of seasonal properties, as you know. And some of them aren't so seasonal. They're 4 seasons. So the most common things that I would suggest to people, first off, the contents, the personal property inside, standard, regular, if you will, cottages may not have expensive contents and so on. Quite often there'll be secondhand furniture from the house or what have you. So there'll be a relatively smaller amount of coverage compared to your principal residence. So that's one thing. That's not a big deal. That's not the real issue. The biggest concern about seasonal properties, number one, we mentioned liability. Again, make sure you've got at least $2 million. Quite often these properties are on water, and water is a risk. Quite often people enjoy themselves to some degree on the water at cottages and so on. So there are risky things that can happen, and it only has to happen once in somebody's lifetime to affect them for the rest of their lives. So think about liability and different damages, including motorcraft as well too. We're always reading about these things, unfortunately, these tragedies and accidents that happen every summer in Ontario, but unfortunately people have to be protected and they have to understand these numbers. Another example, and probably the greatest risk arguably, would be fire. One of the common questions that every insurance person asks is, how close are you to a fire hall? How far are you to a fire hall? So I've seen a policy that stated fire hall protected, which generally means you're within 13 kilometers of a fire station. But I saw it on an island property, and that's impossible. You can't be fire hall protected if your cottage is on an island. So that person was very vulnerable, and that was incorrect. So we fixed that quite quickly. So those are the real main concerns about what to look for in coverage on seasonal properties. Again, the cost to rebuild a seasonal property or cottage varies tremendously from maybe $100,000. It could be a shack. Or a cabin, right up to the multi-million-dollar policies that we see in the lovely magazines that we'd all love to live in. So, but make sure that those things are responsibly recorded.
Wonderful. And we were talking a little bit earlier on seniors. So maybe you could tell us about what type of coverage that seniors should be looking for. What age should they start reviewing and looking at if they're, available discounts for them, I'll let you take that away because I know you specialize with seniors. So
I've got a real soft spot for seniors, thanks to my grandmother. So thanks for letting me chat on this one briefly. It's nothing magical, really, Kelly. Based on my experience, what I've seen with some seniors who are fortunate enough to still live on their own, there's some best practices that we all really know about, but they should really do things about, such as home alterations, making the home safer for mom or dad or grandparents to live in. I mean, those are obvious things. You don't have to be a mortgage broker or an insurance broker to talk about those. What I would mention, though, is that I have seen policies that have not been reviewed in years and years and years because the senior has had the same insurance person for many, many years, in some cases decades, and nobody's really looked at them as an objective third party. I may not be objective because I also sell insurance, but at the same time, I'm going to cover off these points and point them in the right direction, whether I work with them personally or not. But with the seniors, you really want to see whether things have been updated because things change in their house. Things are replaced in their house. The furnace is a big one because we do have winters in Ontario. And I would highly recommend that once their furnace gets to a certain age, they may want to consider having annual or biannual, every 2 years, maintenance contracts with an insurance company, an HVAC company, where they come in and they service the furnace, especially if they're living on their own for obvious reasons. Mm-hmm. So those are the important things. I will like to add as well too, whether the senior or anyone lives in a small community versus a larger urban community, I don't want people to get caught in the idea of my insurance person is my friend. I've known them forever. They're really sweet. They're nice and so on. Because the bottom line is you don't know what you don't know. Have an objective third party take a look at what you're covered for, and they could send you away to that person to get some changes, some fixes, and some things clarified as well too, because you don't want an accident to happen and then discover how you're covered.
Right, and I find when people are going through the house purchase, their insurance probably takes the least amount of time, right? Because all they're doing is calling the insurance, giving them the high level information about the property, the usage of the property, and then, get my binder agreement over to the lawyer, get everything signed, and great, I have insurance, right? That's the typical answer conversation is, yep, got it covered. But if you went back to that client and said, what are you actually covered for? Just finding that policy would be difficult. And I speak to this because I was that person, right? And I stopped having to be that person when it ended up costing me thousands and thousands of dollars. And I thought, oh my goodness, I am not properly protected. What do the other properties I have look like? If this is just one, I can't even imagine what the other ones look like. And that's when I decided to take a much more diligent, process and action, and start looking around to find experts in this field that could actually do a review for me and do the audit for me. And I didn't want a bias. So I spent a lot of time researching and having discussions, because I wanted to see what kind of conversation are they having with me, right? What kind of questions are they asking me? Why are they doing the recommendations that they're doing, right? In terms of coverage, liabilities, types of properties. So, and I've got quite a big mix, right? I've got everything from condos to multi-units to single family rentals. So I've got a big mesh. And sometimes you think, well, if I throw everything together, I'm automatically getting a good rate. And time again, we see people coming in as like, yeah, I bank with TD. I call TD. I got my insurance through TD. Everything's with TD. And unfortunately, you won't know until your claim is denied, right? And that's sort of what we go back to. And I think it's a good way to sort of end off with what's the importance of regular updates with your broker, because I know that when you're dealing with a lot of people, you're not getting a phone call and you're not communicating back and forth. Most people just get the renewal and keep going, right? You don't even necessarily need a phone call. It's just, you just keep going.
That's right. And that is how we are conditioned, unfortunately, until something bad happens or the premium goes up so much, then something happens as well too. You mentioned something very interesting, because I do a lot of work with realtors and mortgage brokers as well. So I like to think the realtor helps to buy it, helps to sell it. The mortgage broker helps to finance it. what are you doing to actually protect it? And you're right, everybody checks off the box, says, yep, I've got insurance. But like a lot of things in life, that means a lot of different things. It's what do these numbers really, really mean?
Mhm. And I think that we get very busy in our lives and we don't think to make that phone call, right? We don't think it's like, oh yeah, we just got that done. Oh yeah, I just got that fixed. I know I probably have 100 things going on a year. So the last person I'm contacting is usually my insurance person. So again, it's your money. You work very, very hard for it. So protecting that asset, I cannot drive it home enough. People have to stop shopping rates. They do it with everything. We're conditioned to do it. And again, until something happens, I've personally had 4 different claims. I should have been a water sign because it follows me in every property I go to. So I'm not new to watching family members have had fires and water and looking at the heartache that they go through. Even if they have coverage, it could be months before they even get any money, right? Because that's a whole other side. It's one thing to have protection. It's another thing to actually come out the other end and not have to give your left arm, your right arm, your blood, sweat, and tears just to be able to prove that some of that money should be paid back to you, right? And that's the hardest one is to me the claim side. And maybe you can talk a little bit about that claim side to wrap up.
Yeah, that's right, because that essentially is what we're paying for in premiums over the years. What is my experience going to be like if and when something happens?
Mhm.
So we talked about ensuring that you've got the right coverages, and how do you know you've got the right coverages? So we spoke about that. We talked a bit about home inventory. Take pictures of everything in your house, folks, because this will come up in a claim. Everybody's going to be compensated pretty much for the everyday average stuff. It's the more expensive things. So again, take your phone and take photos of labels, designer names, brands, and so on. Expensive clothes and shoes, put them out and you can do a group shot, and then you can expand on the labels so people can actually count how many things are on the hanger and then put them back on the hanger as well too. It's not exciting, sexy stuff to do, but you will regret it if you do not. Because you're right, we can't guarantee what kind of experience we're going to get if we do need this one day, but you want to put yourself in a position to get more money faster. And these are some of the things that we talked about. If we do make a claim, look at these things, actually do something about it. I tell people, because they say, yeah, I'm going to do this, Larry, and I never hear from them because they can't find their last insurance policy, and it's not fun to look for this stuff. So I say simply, send an email off to your insurance person and ask them to email you the last renewal that you've had. Let them do the work, and they'll flip it back to you. You flip it to your insurance person, and bang, there it is.
Hmm. And do you find that there's different companies that do have different claim processes? So are some better than others? Do you notice that being a broker?
Yes, like anything else, some are better than others. Quite often, the larger the insurance company, the more likely they are to retain their as much control as possible for the whole claims process. So they may have departments that do everything. Some smaller companies may farm out some of these functions, which means that there's not as much control, which may or may not lead to a poor experience. It's difficult to paint everybody or a certain company with the same brush all the time. Basically, it depends. So one may look at what the industry is doing, how that company is doing financially, what their major stakeholders and shareholders are looking for this year or next year. We are seeing some companies that are removing themselves from certain types of risks because they've been losing money over the year or years. And they've decided we're not going to do that anymore, which shrinks the amount of choice that we all have, which is not good. So we do need insurance companies because the more they're out there and they're more and making a reasonable revenue and return on their investments, the more choice all of us will have if we're working with brokers, generally speaking. I will state, and this is rather significant, that last year was a bad year in Canada for the insurance industry, and this year is not better. So, and all this reflects on the premiums on all of us, generally speaking. So, plant that seed when you look at your premium coming up next.
Right. And I think that is very important because I think that also falls in line with your regular updates because as the industry changes, as climate changes, as different
Coverages.
how you're doing coverages, everything sort of melts into one. So if you're doing the regular updates, it may make better sense to move right to a new to a new company when you're up for renewal, right? It's always best to just have that quick call and update, right, your broker.
It is, and you do not have to wait till renewal time to make, first off, to make any changes, upgrades, or downgrades in your policy. You can do that anytime.
Mm.
And you can also cancel and move to another insurance company if you wish at any time. And this year, Kelly, I've been doing more of that, doing the calculation for cancel penalties for people, because the delta, the difference between moving off of one company and onto another company, saving money and getting better coverages, I'm seeing more and more of that, and it makes sense mathematically too. So I'm excited about that, because people are actually being educated on why it makes sense, and it doesn't cost what you think.
Wonderful. Well, I want to thank you so much for all of your very valuable information. I've learned a lot in the past week, just having back and forth conversations. I mean, I've always learned a lot for the past year talking to you, but definitely we've covered, I think, just about everything. I mean, there's always things that you're going to have questions on. So if you want to get in touch with Larry, you can give us a direct call or email us. And thank you so much for your time today. It's been valuable. I wish people, all the success in buying new property and becoming landlords and buying homes. But this is one of the biggest things you have to be paying attention to. You have to protect yourselves, and don't wait until it's too late. So thank you very much for joining us today.